Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. We're going to go through the commodity updates, daily technical analysis. I'll give you my financial opinions. We're going to work our way through the dollar, yields, precious metals, and then through a lot of the commodities and ETFs that I follow. So let's dive right in, take a look at what's going on. We've got the DXY here, the relative strength of the dollar. Definitely strengthening. We've got a nice big bullish engulfing today, which indicates that we want to go higher. So we've got the break of the downward wedge out of that wedge sideways. And now we're putting in some pretty strong green army candlesticks is what I like to call it. They're the big kind of buying pressure candlesticks, which generally lead a move to the upside. So the dollar looks like it wants to go higher in the short term. We've got the 10-year yield slightly higher today. No real reversal candlesticks in here, just kind of bouncing around aimlessly. Bond prices also look like they want to go higher here. This is a bullish engulfing pattern where it engulfs the day before it. That usually has a probability of heading higher, so that looks good for a move higher. TYX is down 0.58%. So we have the 10-year up 0.3% and the 30-year yield down 0.6%. That is an inversion of the yield curve. So TYX to TNX ratio inversion means lower. That's what that is indicating there. And that usually puts pressure on gold and silver. So we've got an inverted yield curve with a higher dollar. So expect lower precious metals prices under those conditions. We've got the CRB index contracting up, the opening and closing price contracting and closing together. We're still in this pattern here. We kind of basically came out and we've kind of came down a little bit with the price of oil coming down. And we're still in the pattern. We're contracting down. We'll see if we can bottom here or not. We still have a lot of selling pressure pinning this thing down to the downside. We've got the CRB to S&P 500. This thing's bouncing all over the place. We used the support level here as support. We came up a little bit today. Commodities outperforming the S&P 500 a little bit. Gold lower today. Now, is this a retest or are we actually going to go lower? This is a bearish engulfing pattern where the candlesticks engulfs the one before it, which generally indicates a potential topping pattern where we could head lower. This is a rising wedge. So is this a false breakout? We're going to find out here soon. What it looks like to me is where we could potentially go lower in the short term. Silver is also heading lower. It's putting a little bit of confirmation on this. We have wicks at the top there. So we tried running, sellers sold us off. We tried running, sellers sold us off. And here we are selling off today with some good momentum to the downside. So that does look like to me that we could potentially head lower, and it's a break to the downside. Platinum also heading lower. We've broken out of this pattern here. Maybe we come back and do a little bit of a retest. I'd say, 10,000, 20,000 bucks or 1,020 is really where it's at. There is heavy resistance right where we're at. If we look across, we've traded a lot in this general vicinity here. You can see kind of where this thing turned many times in history, all through this section here and here. So it's no surprise that we're getting a little bit of selling pressure right where we're at. We're trying to break out of this sticky buying selling zone, and we just have a little bit of sellers coming in. XAU to gold ratio still outperforming for the gold and silver mining companies. XAU outperforming when this goes higher. Again, my eye is on the downtrend line here. We call it the need to break this line for happiness. If we can break through here, guys, and get moving, that's what we're looking for. GDX slightly lower. We're right at that resistance line. Again, we outperformed gold itself. So the gold and silver miners fell down less. This still looks good to go higher, in my opinion. SILJ also looking good. It's holding its own. Now keep in mind, though, I said it looks good to go higher from those candlesticks. But if we see gold sell off and we don't, it's not a retest move, then I do think that the mining companies will get pulled down with it. So, keep that in mind. It looks good right now. If gold pulls back and this is just a retest of this line here, If this is just a retest here, then I do think we're going to go higher. But we don't know yet. We're going to have to see. This is a bearish candlestick on top of a pattern right at support. So we're going to have to watch and see tomorrow where this thing breaks. Crude oil higher today. Again, it's not a huge move or anything like that. I think it's going to take a little bit of time for this to kind of work its way out down here. There is the potential that we still come back and test this upper 60s here if we want. And there's a lot of momentum heading to the downside for crude oil. Now, I know that China's reopening, and I know some people think like it's immediate. It's not immediate, guys. It's going to take time. It could take weeks and months, or maybe even a year or two for China to fully get their demand back to where it was. They've been locked down for a long time. There's a lot of pent-up demand. It could come back pretty quick, but it's not going to be immediate. So this is putting in what I think is a descending wedge. It may have some more time to work out, and that reopening might take a little bit of time. So just be patient. Maybe this thing comes back down. We do another one of these before heading higher. So it might take a little bit of time. Natural gas, we've got warm weather over in Europe, and it does look like we're trying to slow this move down, but there's a lot of momentum behind this move. The weather over there, I guess people are saying it's like summer over there in the winter. And, that was one of the large drivers of high natural gas prices over in Europe and what's driving the Henry Hub higher. If we lose that weather, at least for a little while, we could see a pretty big pullback just like we have. And we're just waiting for this to turn around. I do think that this is a very good opportunity for a long-term hold somewhere in this general vicinity when this thing starts getting some buyers coming back in to buy it. But I'm being patient there. We've got XOP. Yeah, you know me. We still have a lot of selling pressure through here. So there's a lot of selling pressure here. We basically paused. It's a flag pattern. And I do think that we could bounce and come back down to this general vicinity a little bit lower. Now, what I usually do is I cost average in when we start getting low in this general vicinity over time. That's kind of how I play it. So I'm kind of waiting to see where this thing goes in the short term. I do think there could be a little bit more downside left in it. OIH is also looking quite strong, but keep in mind, we've got this bearish engulfing here. We had a lot of kind of selling pressure through here. We've struggled to move on up. We broke to the downside, and we have not reclaimed that resistance level above here yet. So we could turn and head back down lower in the short term, especially if oil's not done going lower yet. So this could just be a small little relief rally before heading a little bit lower in the short term for OIH. I do think that OIH is an excellent opportunity to purchase very soon, or if you take the stance that you can kind of cost average in this entire area, that's the way that I normally play it. The Sprott Physical Uranium Trust up 1.3%. So that's looking good. It's a bullish engulfing. It doesn't look too bad to me. This could potentially go higher. Everything's looking good. Momentum's to the upside. Nice, good bullish engulfing here and here. So those are nice candlesticks. URNM also moving higher. We're right at the tip of this thing, guys. We are basically squeezing on up. Now, which direction is this thing going to go? What I usually do is I look at the candlesticks and the size of the candlesticks and how it's falling and going up. In all honesty, guys, this is a really hard look here. We still have selling pressure, large red candlesticks all through this section here, which could mean it goes lower, but we also have some pretty good buying pressure in these general vicinities as well. This is a pretty much an even draw between the buyers and sellers. I don't know which way this thing's going to break yet. If I were to take a look, we do have a bearish engulfing here and here. That's obviously not great, but we do have some characteristics of a potential move higher here. So it's really a battle. We'll see which way this thing goes. Be fun one to watch. And right now, it is indecisive, and we're coming right to the tip of this corner. Looking at TAN's down today. Higher dollar. We had somewhat of a higher yield, depending on which yield you look at. But this is selling off. The momentum is still to the downside for TAN. Copper's actually looking. We're getting battles here. Selling pressure, buying pressure, back and forth, back and forth. Bearish engulfing here. We've got some bigger down candlesticks through here. We've got a nice up, up candlestick today. Which way is this thing going to break? We're in a channel going sideways. I don't know. We're going to have to find out. But right now, the momentum came up into it. So I think it's a flag pattern where it could be a continuation pattern to the upside. Lithium, it is consolidating a little bit down here. That is a little bit of a bloody nose today. We'll see if we can reverse this. We have a bearish engulfing right before it, bullish piercing right after it. Buyers and sellers are duking it out back and forth. Looking at a bigger picture, though, the momentum is to the downside. So whichever momentum way it is, that's the way you have to basically favor until you get some good turning points. But on a weekly candlestick basis, the opening and closing prices, they're contracting. It looks like it's trying to turn around and move higher if it's got the strength to do so. Then we have to look to see how big are these candlesticks coming out of here. If they're real small, we'll probably just roll back over and head a little bit lower in it. That's my guess. REMX looks like we're trying to put in a bottom here. We're up 0.78%. And when I say bottom, I'm talking like short term time frames. But still, momentum's down. I don't see tons of buying pressure yet. I would just be waiting. The S&P 500 still looking not that great. No reversal candlesticks really in here. I mean, there's a hammer candlestick here. It tried, but we're still getting selling pressure. So it looks kind of heavy here. Maybe this is a flag pattern that will break to the downside. We haven't broken it yet, but looking a little heavy after today. The NASDAQ down 1.47. That also looks what I consider a little heavy. We're getting some selling pressure. There's no real wick at the bottom. Nothing really saying that the buyers stepped in and want to buy this thing. Could go lower. EEM slightly lower today. This still looks really good compared to the other stuff. And emerging markets, China, they've got some stimulus money that they did. So I do expect this to maybe go higher here. XHB, slightly lower, still looking pretty resilient. It sold off, but buyers came in and bought it up. That's why it's a green candlestick. So it opened down, and then buyers came in and bought it back up. Momentum higher, but we had a down day today. MOO also doesn't look too good. I'd just be waiting on it. Big bearish engulfing there in the circle. We've got copper. Copper looks really strong, and we've just been grinding on this line here. That's that resistance support line. We're just gravitating right to that line. We've got lumber down 2.5%. We're still in this falling wedge, and we're right at the tip of the falling wedge. We're right on support. We'll see if the support holds. We've got iron ore. Let's switch to the line charts. Iron ore is just moving sideways here. We've got nickel slightly lower, but still looks really good in an uptrend. We've got aluminum also heading lower today, right on support. That's what aluminum looks like in kind of a longer term, big picture view, right on that support level. Baltic Dry Index a little bit lower. This is a return move back to the breakout. So Baltic Dry Index and oil are pretty closely linked. And we're getting a little bit of a pullback in both of them. Obviously, they kind of move in tandem or together. I still think Baltic Dry Index looks good. And I think oil will eventually work its way to the upside. We just need the demand from the reopening to come back. We need the strategic petroleum reserves. They're done. We're still looking at data with the strategic petroleum reserves coming from last week, but we need to work our way out of this, and it's just going to take some time, I think. Coal, Newcastle coal, just grinding below that resistance line up there, much like copper is. And then we've got Ethereum slightly lower and Bitcoin slightly lower, which is basically just a sideways move. And I use that for liquidity. So that's what we've got for today, guys. Oil is just kind of bouncing around. Natural gas has gotten hit really bad from the weather over in Europe. And that's going to impact everywhere because, they're fighting for energy and they'll buy anything. They'll buy oil, they'll buy whatever. But we've got warm weather over there. And I think we've got warm weather here too in America, which doesn't do well for natural gas. Natural gas is highly dependent on weather. That's just the way it is. And sometimes you have to ride through some of this stuff. We're still in an energy crisis. We still have problems out in front of us. I think it's going to take some time for us to figure this all out. If prices stay pretty low, which they're pretty low right now for oil and even natural gas, I don't think these companies are going to make all that much money. which means I think prices are going to go higher. They're going to cut back. So I think that in the longer term, we'll see pricing above $80, $90, $100 a barrel sustained. And that'll be the only way to really kick on the oil market, the production supply side for a lot more supply if we need it. Now, I know the Federal Reserve's trying to slow demand. They're raising interest rates. Now, are they going to be successful at it? I don't know. They have been in the past to some degree, not every degree, because, I mean, they are slowing down the housing market, that's for sure, with increased interest rates. But we're in the middle of a construction cycle. The shortages still exist. So then the question is, how long can they hold interest rates high? That's really what it is. What's their next act? Are they going to come back and lower it? If they lower it, I think the demand will kick back on. We'll see new homes sales go up, and these housing starts go up. But right now, everything's kind of, I'll say, in frozone mode. It's all frozen. But if you guys need help with anything commodity related, definitely sign up, finding-value.com. Join the Platinum membership. Use the word discount in the coupon code. We've got a Platinum question and answer session Saturday, 7 a.m. Mountain Standard Time if you'd like to join us. And that's all I've got for today. We'll catch you next time. This is Finding Value.